All right, greetings and welcome everyone to the Quarles and Brady webinar, Policyholder Advocacy, Strategies for Maximizing Insurance Coverage. This is our third program in the Litigation Leaders webinar series. My name is Josh Maggard. I'm a partner and the National Vice Chair of the Litigation Group at Quarles and Brady. I'm pleased to introduce today Patrick Murphy, who is also a partner in the Litigation Group. Patrick's practice focuses on insurance coverage and complex business disputes. He has substantial experience representing policyholders in several industries, including manufacturing, financial services, healthcare, and direct sales. He regularly litigates to secure coverage for his clients under CGL, D&O, professional liability, and other insurance policies. Patrick and I are both pleased to be with you here today. Before we begin the presentation, here are a few housekeeping items. First, you may access a copy of today's presentation and related materials in the handouts panel of the webinar dashboard. Second, we have muted all phone lines for those dialing in or listening via computer, so you will not be able to speak. We are in listen-only mode. Third, we want you to be aware that this presentation is being recorded, and an electronic survey will be emailed to you after the program. Finally, if you have a question during the presentation, please type your question in the Q&A box located in the upper right corner of the webinar dashboard, and then hit submit. The conference host will make sure Patrick receives the message. Every effort will be made to answer questions in the final minutes of our time together today, but if we run out of time, Patrick and I are available for any follow-up. I'll now turn it over to Patrick Murphy.
Thanks, Josh. So I have enough material and we have a short enough period of time that I will continue to talk, I think, until the end of the 30 minutes. I don't plan to reserve a period of time for questions. I think it makes more sense if you ask questions as they occur to you, or if after we're done, a question occurs to you, you reach out to me via email or telephone. I'd be happy to talk or exchange emails to answer any of your questions. My plan is to walk through a bit of a roadmap or checklist for strategies for maximizing insurance coverage. I'm going to try to give examples and discuss concepts that involve different types of coverage, whether it's fiduciary, professional liability, CGL, D&O, or crime coverage, or fidelity bonds. With 30 minutes of time and with as many different types of coverages and circumstances as can arise, I won't be able to cover everything, but I thought if I gave discrete examples of different types of coverage, that might help emphasize how these same principles apply in various different contexts. So what I'm going to start with is a discussion about, I guess my overview here is we're going to talk about procuring policies, the tender strategy when there's a claim or loss, responding to an acknowledgement of claim, responding to information requests by an insurer, responding to reservation of rights, responding to a denial of coverage, litigation, and settlement. I'm going to hit a few points in each of these categories, but I, as a preview, believe that not mistakes, but missed opportunities that I tend to see occur principally in the tender strategy stage, in the responding to reservation of rights stage, and in the settlement stage. I think all of these are important parts of the process of maximizing coverage, but the most complicated or trickiest, at least when I get involved and dealing with a situation where we're not as positioned as advantageously as we'd like to be, it tends to have been a problem in the tender strategy, the responding to the reservation of rights, or in settlement. So those are the three categories or areas where I'll spend a little bit more time. With respect to procuring policies, the first thing I want to mention is that there's a difference between brokers and agents. And a broker can sometimes be an agent and vice versa. The broker owes duties, at least a duty of care in some jurisdictions, may also owe fiduciary duties to the policyholder. They're your broker. An agent, on the other hand, owes duties to the insurer. And this gets complicated where your broker serves as a surplus lines agent for an insurer that is not admitted in your jurisdiction to issue the policy that's in question. These broker-agent distinctions there are some obvious differences. As I mentioned, the duties that are owed. An agent doesn't owe you a duty as a policyholder, but your broker does. But there are less obvious differences, and the one that comes up more often than not is that under several states' laws, the place that a contract is entered into provides the law that applies and governs that contract. So if a policy is issued in Maryland, Maryland law governs. That's the law of some states. Some states have a different law, and it's the principal, there's a multi-factor test under the restatement, and it's the principal location of the insured risk. For domestic, national, or international corporations, that can be a debatable question as to where the principal place of the insured risk is. But the broker-agent distinction, and point I want to make here is that if your contract, let's say you're a Wisconsin corporation and you work with a large national brokerage firm, and the individual person that you work with and deal with and interact with on a day-to-day basis is based out of Washington, D.C., and the policy is issued from an insurer in Connecticut to your broker in Washington, D.C., under some scenarios, and I guess to take that back, Wisconsin's a bad example because we have the restatement form, but let's use my Maryland example. If you're a Maryland company who contracts with a Washington, D.C. broker, and the policy is issued to your D.C. broker, D.C. law will apply under most circumstances, not Maryland law. That may be a surprise to you, the Maryland company that had business in Maryland and only in Maryland, to discover that because of the location of your broker, a different state's law might apply. And there are various permutations to this, but as I mentioned, if your broker is also the surplus lines agent for the insurer that issued the policy out of Connecticut, it can get complicated and lead to unintended consequences. So the other point I'll make about procuring policies is that you can often negotiate a provision in the policy that states the law that will apply and avoid this uncertainty. And you can negotiate that during the procurement and underwriting phase much more easily than you can after the fact. Similar point, that policy terms that can be negotiated at procurement that cannot be addressed as easily later on is choice of counsel. If you have counsel that you work with routinely for various different business matters, including litigation, and you want that to be your counsel to represent you when a claim comes in and is covered under the policy, insurers are much more flexible about negotiating choice of counsel provisions when doing so in connection with the underwriting phase and policy inception than they will be after a claim and loss occurs. They'll be much more resistant to allowing you to use your preferred counsel after they're now spending defense dollars or potentially have an indemnity obligation. Similar concept with respect to other insurance provisions. Here, the issue is if you don't pay attention to the interplay between the other insurance provisions, you may end up with different policies acting as primary than the policy that you intended. So other insurance provisions govern and deal with when a particular policy that is covers a contemporaneous period and loss as another policy, which of these two policies will apply as primary and which will be excess. An easy example, and one that occurs frequently, is if you have a professional liability or E&O policy and you suffer a loss that arguably hits that policy or a claim that arguably hits that policy, but also you have a general liability policy and the same claim triggers both coverages, we will look to the other insurance provisions of those two policies to determine which is primary and which is excess. If the professional liability policy, as is often the case, the professional liability policy has burning limits, meaning that defense costs that are paid reduce its limits, you may very well, and the CGL policy, the standard CGL policy is the opposite, defense costs are outside of limits, you may very well want the CGL policy to be primary. But if you haven't reviewed at the procurement phase your other insurance provisions to ensure that that will be the outcome, you may end up with an unintended consequence when that claim hits. Limits and self-insured retentions are, people do tend to pay attention to the amounts, but what might be missed is whether there are sublimits or different retroactive dates under the policies, something that you'll want to pay attention to. And then finally, at the procurement phase, I pay particular attention to non-standard manuscript policies, non-ISO form policies, and these typically include cyber, some crime policies, and reps and warranties. The point here is just that these policies are less uniform insurer to insurer. So in particular at renewal, or if you're transitioning from one carrier to another in a policy year, you want to make sure that that the new form policy matches the core provisions of the expiring policy. All right, turning to the tender strategy, which, as I mentioned, is one of the more important phases in maximizing your insurance coverage. There's a partner of mine's phrase that he uses often when it comes to tender is, when in doubt, tender it out. And I really think that that's important. Frequently, I get involved in, I would say late notice ends up being an issue in some form or fashion in the majority of cases in which I'm involved. And that's regrettable because it's an issue that you can take off the table and avoid any discount that the insurer wants to apply to your claim, or potentially the bar, preclude coverage for your claim by getting out a timely tender. And the reason that this becomes an issue is that there's often an expectation at the outset that a claim might fall within the self-insured retention. So why would I need to tender it? Or it might fall within the primary policy. So why would I need to tender it to the excess carrier? Or why would I tender claims to coverages that may not apply? Isn't that going to increase my premium? And the answer to that last question is often no. That the premium, if the carrier does not pay on the claim and does not respond to the tender honoring coverage, it often is the case that the fact of having tendered it and received that denial or response will not increase your premium. So there's no disincentive for you to tender to all applicable coverages. The key, one particular area of concern often is administrative proceedings or determinations and appeals under self-insured benefit plans. If a benefit plan member appeals the determination or denial of benefits, and that appeal is not tendered to the fiduciary carrier that issued fiduciary coverage for the plan, and the member, after the appeal is denied, ultimately files a class action contending that the methodology used to adjudicate his or her claim is inconsistent with the ERISA plan or the summary plan documents applicable to that kind of healthcare benefit. You've now got a situation where when you turn to your fiduciary carrier and say, we want coverage for this class action, it's a new class action. They say, when were you first surprised of this individual's claim, the class member? And you say, well, we denied the claim and there was this appeal process 3 years ago. You've got a late notice issue. I'm not suggesting that you tender every single appeal of benefits or every single more mundane or minor administrative proceeding, but I am suggesting that you make a conscious choice about tendering, and when in doubt, issue the tender. In terms of the scope, consistent with the idea that you tender early and often all claims, tender them to all potentially applicable insurers, even under policies that might not yet apply, for example, access, or under policies where you're an additional insured. We see often situations where your claim may begin as an advertising injury claim covered under the CGL policy, but as the suit progresses, it becomes a D&O claim or has a potential for coverage under the D&O policy. And if you've only tendered to the CGL carrier and first tendered to the D&O insurer several months or years later, you may face late notice issues. You may also have had the expiration of a policy in the interim and a renewal, and the new policy may not apply to the claim that first came in if it's a claims made policy during the prior policy period. There are in several D&O, and basically all claims made policies, there are provisions that discuss related or interrelated claims that arise out of same facts and circumstances being deemed and treated as a single claim for which coverage is available, if at all, under the policy during the policy year in which that claim was first made. So in our example of the class action arising out of the appeal of the plan member benefits determination, the resulting class action several years later is going to relate back to and be deemed part of the original claim. So again, you not only have a situation where you have to tender to all applicable policies, but you may have to tender to policies issued in earlier years, especially if you tender a related claim under that same policy year. In terms of the process for tender, brokers can generally help. I often will defer to the broker to tender the claims because the tender isn't necessarily more than just a loss has occurred or a claim has been made and here's the claim that's been made or here's preliminary information regarding the loss. What's important here is to tender in writing and keep a record of receipt to avoid late notice defenses. There are situations, and as we get into talking about responding to the insurer, I want to make the point that in developing a tender strategy, you should give some thought to the content of the tender in this sense. You want to package your claim and supporting information to control the narrative as early as possible. It will preempt delays and create a record of acquiescence by the insurer. So just as an example, if you have a fidelity loss or a crime policy, and you suffer a loss, you often have to determine which part of the policy you're contending coverage is available under. Is it employee dishonesty or is it forgery and alteration? You want to make that decision relatively early, even if you don't disclose the decision to the insurer. And you may need to consider in making that decision, what are your losses? It's not enough just to say this might fit in all of these buckets. You want to begin to think about where how are you going to prove up the amount that you're going to claim? Did the employee actually take money? If so, did they take it from your place of employment? Is it a situation where you're liable for loss suffered by others because of forgery or alteration by your employee? Those are differences in the way that you would package your claim, and controlling the narrative at the tender or at the proof of claim stage will often produce better outcomes and more efficient outcomes later in the process. Briefly on responding to an acknowledgement of claim letter is not an acknowledgement of coverage. I think the acknowledgement often states that, but I think when people receive a response from an insurer, their inclination is to say, okay, well, I satisfied my tender obligation, I'm all set. That's not true. In fact, in Wisconsin, the absence of a reservation of rights letter is not an acknowledgement of coverage. In Wisconsin, an insurer will not be stopped from asserting coverage defenses at a later time simply by virtue of the fact that it failed to reserve those defenses. So if you tender a claim to the insurer and you receive no response at all, you cannot, in Wisconsin, assume that that means the insurer agrees the claim is covered. Instead, you must and should insist on a written coverage position from all insurers so that you can begin to develop a strategy for responding to the defenses long before you're in a mediation or settlement or submitting a proof of loss and want to know what proceeds you should expect to receive from the insurer. In connection with responding to requests for information, it's often very important to review the policies in their entirety. D&O is the category of policy that gives me the most concern here, because today's D&O policy is 3 or 4 pages of standardized language and then 40 or 50 pages of endorsements modifying that standard language and adding information. So it's really critical to review each of those endorsements in their entirety before you respond to requests for information. For example, if you have exclusions in the endorsements for specific claims, it'll be critical in responding to the request for information that you make sure to preemptively characterize the current claim as something distinct and unrelated to those prior suits. How express or specific you are in doing so is more art than science, but you'll want to have done that analysis. I think it is equally critical that you timely provide requested information. I think there's often somewhat of a knee-jerk reaction to requests for information saying, well, I don't even know what your coverage position is. Why would I start to give you information about my claim or loss? I think failing to establish early lines of communication is a real missed opportunity with the insurer, even if all you're going to get back is a bunch of denials or defenses. Knowing those early on, knowing the insurer's position, will allow you to then begin to probe which of those defenses are really the impediment to receiving insurance coverage. Which does the insurer care about most? And addressing those defenses is going to take some time. So knowing that early, establishing the lines of communication, and providing requested information, but doing so strategically with an eye towards what are the likely defenses and which ones are likely to matter. Finally, honor the duty to cooperate. It's a real duty, but it doesn't require that you prejudice your claim or defense. In particular, it doesn't require that you oversell the merits of your defense. It's important that you manage the insurer's expectations. You don't want to say at the outset of the claim that this suit is frivolous. At most we would need defense costs, and then find yourself 8 months later asking the insurer for $1 million in settlement authority. You have a duty to cooperate, but you can be realistic with the insurer and maybe even a little bit pessimistic with the insurer in providing information to ensure that you have the flexibility to ask for the authority you need later. Insist that insurer put its coverage position in writing, and there are special traps in first-party coverage, 1-year statutes of limitation in Wisconsin, which apply in first-party claims, property claims under standard property policies, as well as under crime policies, which are deemed to be first-party policies. You may not think that. The insurer may request information and draw out the time period for you to, or even agree to extend the deadline for proof of claim, but if they ultimately deny and you wait longer than a year from the date of loss, not the date of denial, you have a statute of limitations problem. And a broker might be able to help with responding to requests for information, but generally at this stage, the broker is less effective as an advocate and more effective just simply as a conduit. Responding to reservation of rights, and as I mentioned, this is an important stage in the process. It is critical, in my view, that you create a record of disagreement to avoid the carrier contending that you acquiesced. So if you get a reservation of rights asserting several different grounds for denial, you don't need to lay out a detailed coverage analysis and a 40-page brief in response. A simple short letter of "we disagree with your coverage analysis and reserve all of our rights" is an appropriate response, and will avoid a year and a half later the insurer pointing out that you failed to respond to their coverage defenses, leading them to believe that you agreed with them. I also think that it is very important to insist on the right to independent counsel and control of the defense. The right to independent counsel exists under most states, and including Wisconsin and Illinois, in the event that there is a conflict of interest that arises out of the insurer's reservation of rights. So if the insurer takes the position that coverage may be barred for a certain portion of the claims, that creates a conflict for defense counsel who, if retained by the insurer, might have an incentive to develop the case in a way that the uncovered claims are the primary liability. When that exists, insisting on independent counsel is critical, because you need to be able to have independent counsel assess the merits of the claim, so that you can then use independent counsel's evaluation for purposes of demanding settlement authority from the insurer. Beware, however, even when you have independent counsel in the state of Illinois under the waste management decision, communications with counsel are likely not privileged from the insurer. Communications with your coverage counsel are, but communications with your defense counsel, even if independent, may not be. The right to select counsel is distinct from the right to independent counsel, and I insist on both. The response from the insurers is often, you can have whoever you want, but we're only going to pay the rate we would pay to panel counsel. There's very good law, especially in the Seventh Circuit, that the rates that an insured would pay in an arm's length transaction with their counsel, absent the insurance coverage, is the rates that ought to apply and that the insurer ought to pay. So I fight the rate dispute to maximize coverage, and I reject any purported right of recoupment that doesn't exist under the policy. And routinely insurers will try to reserve the right to recoupment, which is a right that does not exist, And if you proceed with defense dollars being paid by the insurer without rejecting that right, you have arguably modified the terms of the policy to allow for recoupment, which you do not want. Finally, consider how your defense strategy can improve your coverage claim. If your carrier's reservation of rights indicates that they're construing certain allegations in the complaint in a way that's not favorable for coverage, consider a motion for more definite statement in the underlying action. If you advise and educate the plaintiff about the insurer's coverage defenses through your motion, they may include additional allegations that would be beneficial for your claim. Similarly, you can move for an early motion for summary judgment on uncovered counts to avoid any allocation disputes when it comes to settlement if the carrier is taking the position that they only have an obligation to pay for those counts that are covered under the policy. Response to denial, I'm going to skip over and focus more on coverage litigation, which is really where the response to the denial often goes. My point on coverage litigation is this: file when you have to, but not before. There are situations where the race to the courthouse is critical to secure venue, particularly where there's a choice of law issue, or where you want to establish coverage litigation that is independent from the underlying litigation in the hopes of keeping those two suits separate so that the claimants in the underlying lawsuit do not discover the facts and information that is being produced in the coverage litigation. But if you do not have one of those considerations where you feel compelled to race to the courthouse, there are many advantages often to avoiding coverage litigation until it must be filed, including that if you file coverage litigation, it almost inevitably results in an immediate delay in all discussions and communications with the insurer of several months while they answer, create a record of the basis for their denials, respond to any allegations of bad faith, and only then are they back to square one, able to start to negotiate with you. Filing can also, of course, create headaches with underlying defense if you have to fight a two-front war. In terms of when you file coverage litigation, consider the pros and cons of including all excess insurers. It is often the case that if you fail to include all excess insurers, you will ultimately need to at a later time, and you've lost the momentum and the excess insurers have to get up to speed. But there are costs associated with including them all in the first instance. Be prepared to litigate all issues in coverage defenses. Insurers routinely respond to coverage litigation with at least 45 affirmative defenses, and they mean them all, except that they really don't. And it's hard to tell which ones they really mean until you get coverage counsel involved for the insurer and have a frank discussion. Learning which issues and defenses the insurer actually cares about most is an important step in the process, and the earlier you can do it, the better positioned you are to both maximize coverage and efficiently do so. And then seek all available relief, including fees and interest, where available. I've got just a few minutes left and want to touch on settlement. The settlement takes time, and the process starts months before any mediation in the underlying lawsuit. I think a lot of policyholders believe they're going to be able to jam the insurer up with bad faith allegations by forcing a settlement discussion early in the process and by delaying providing the insurer information so that the insurer is just receiving the information on the eve of the mediation. That almost never works. Instead, it's better to establish lines of communication early, anticipate a process, strategically preempt certain defenses, learn which defenses matter, and address them in this process throughout the weeks and months it takes to get a mediation scheduled. The process often involves coordination with the underlying plaintiff and defense counsel. You need the plaintiff to make certain allegations and certain threats. You need defense counsel to evaluate those in ways that are favorable to your coverage position. And that also takes time and emphasizes the importance of having independent counsel involved in the process. Finally, I want to make a point on, this is in particular important on D&O claims. There are provisions in D&O policies. The current standard language discusses the allocation between covered and uncovered claims, and the language talks about the insurer's obligation will be limited to and determined based on the relative legal and financial exposures of the insured to covered and uncovered matters when it comes to payment in the ordinary course as to of defense costs. When it comes to settlement, the insurer's obligation is based on the relative benefits to the insured of the settlement for covered and uncovered matters. That provision, I've been told repeatedly by coverage counsel for insurers, is a provision that the insurance industry is very interested in litigating and enforcing. In the last year or so, it is a repeated mandate that the insurer, claims handlers, and coverage counsel take advantage of the allocation provisions. So there will be more allocation disputes, and it is important that you have a strategy for resolving those and that you implement that strategy in responding to our Reservation of Rights letter as opposed to on the eve of mediation. I think we are out of time, so we'll wrap up. I did not get to a couple of settlement considerations, but you have the PowerPoint, and if you have any questions, I'd be happy to answer them. Feel free to send me an email or reach out to me by phone. And here's the contact information. Thank you very much for participating and listening in. We're going to disconnect now.